Well, hello, traders and investors. My name is Roger Scott. I'm the head trader for Wealth Press. Today is July 16th. It's a Thursday. And as I always say, let's get into it right now. Now, folks, just to give you a preview, we're going to have a fairly volatile day today. Or if not, we're not going to see a lot of volatility. We're going to see a lot of news. We got jobless claims coming out in about 20 minutes. We got Philadelphia Fed business outlook coming out in about 20 minutes, and we got retail sales. Now, I don't believe jobless claims is going to be a major report because we've been moving in line with the moving average, and we already know the numbers are in the million. Probably between 1.3 and 1.5 million new claims. But as long as we're below the moving average, we're okay. The big report that I'm looking for is that retail sales. Retail sales is huge. Why? Because retail sales accounts for about 2/3 of the economy. The GDP is 2/3 retail sales. So this report is going to be very, very important, not on its own, but how it reflects on the GDP. It's a very important report. Please pay attention. Now, to give you some perspective of what type of numbers I'm looking at, the consensus is we had a surge. We had a really good surge of 17.7%, way better. Now we're expecting 5.2. Anything better than 5.2 will be better than expected. Hopefully it's not below 5.2. This is the consensus, 2.8 to 6.5. Again, things are a little over the place, but look for a number better than 5.2, all right? Now, let's talk about global markets and stocks because China. Shares retreated. It's too early to speak. Shares retreated in Europe and Asia on Thursday as investors sold on worries that Beijing, yes, Beijing, might cut back on stimulus after its Chinese economy returned to growth in the last quarter. News the Chinese economy grew 3.2% in annual terms in April through June after a 6.8% contraction in the previous quarter failed to keep the rally going. That's very dangerous. The expansion came as antivirus lockdown were lifted and factories and stores reopened. So they say. But it still was the weakest positive figure in China starting reporting quarterly since the early 90s. So the numbers are poor. In Australia, authorities reported that the Victoria state has confirmed a record 317 new cases per day. So folks, this COVID-19 is not going anywhere. The Victoria government responded by reducing the number of non-urgent surgeries allowed in hospitals. Gee, that's wonderful. But rising number of infections and death from COVID-19 pandemic remain a constant source of uncertainty. And folks, till that's no longer on the table, the stock markets are not going to be stable. They're going to be fragmented. Worries also remain high, and the stock market has gone overboard in this rally. Yes, I'm very concerned about that. It's taken less than 4 months for the S&P to almost return to its record after being down nearly 34%. That's not realistic, folks. That's a reaction. Remember, we're still trying to figure out the damage from this COVID-19. A raft of troubling news from more than 13.5 million confirmed cases to escalating friction between Washington and Beijing, like we really need it right now, right? It's posturing, but do we really need it right now? Hangs over the market, but has been countered by massive amounts of stimulus, yes. But the stimulus, folks, is not the end to everything. We still have to absorb all of this information. So let me take you through the S&P, give you some levels, and then I want to look at some stocks that are new hot stocks to sell on my list that I haven't seen before. And remember, we're in full bloom on earnings season. Let's start with earnings, actually. Let's see what we've got next few days. Morgan Stanley, big one reporting today. Let's see what else we got. Microvision, that's a big one. Netflix, oh boy, it's going to be a volatile day today. We've got FNB Bank. Let's see. Banks didn't do so hot. Taiwan Semiconductor Manufacturing. Folks, this is huge. This Taiwan Semiconductor Manufacturing, they have been outperforming Intel. That's right. Taiwan Semiconductor has been outperforming Intel lately on their processes. So as you could see, we're in full bloom today. We got Abbott Labs, and we are now in a broad position. In other words, we got banks, semiconductors, everything is reporting now. We got Johnson & Johnson. So that's the big ones for today. Johnson & Johnson, B of A, Abbott Laboratories, Taiwan Semiconductor. Watch out for this one. It's a big one. Not a lot of people know about this stock, but it's making headways. Home Bank Shares, FNB, Netflix, Domino's, if that's your thing, Microvision, and Morgan. And I'm very interested to see how Morgan's going to report and how they're going to compete with Goldman, because Morgan looked really good on a chart. Now, looking at the S&P 500, let's take a quick look. Ooh, we're going to be down about 0.6 overnight. Let's take a look at this. And again, I'm very, very nervous about this. I told you guys back here, let's see how long ago that was, back in May, all right, about 50 trading sessions ago, I told you that the S&P 500 is going to hover around the moving average line. And what is it doing? It's hovering around the moving average line. And notice while the QQQ, where it went all the way to all-time highs, look at that, higher highs, not the S&P. The S&P, we couldn't do it. And again, as I mentioned, this divergence that we're seeing, these overbought momentum levels that we're seeing, I'm not happy about it. And market internals are not telling us what we want to see. I show this to you every day because this is huge, so I'm going to do it again. Momentum, momentum, momentum. Look at the NASDAQ momentum levels. Look at this. This is terrible. They're just sitting and waiting. Look at this. Look at this. Look at that. They're trying to go up again. Rarely does it ever go up again without bouncing. Folks, that rubber band is stretched out, and now it's doing this, and it just can't go anymore, and after a little while, it snaps. Same thing happened right here. Look, we went above, then we went a little down, then we tried to rally, and then boom. We go up, we come down, we try to rally, and boom. Folks, how often and for how long do we stay at these levels? It's never happened before. We're going to come down. This is just a shakeout. I'm telling you, as I'm sitting here right now, the market is internally in a very overstretched environment. Now, it doesn't necessarily mean it's going to become a bear market. What it means is we need to that rubber band needs to contract before it can stretch out again. And it's stretched out right now to the tilt. All right. Let's look at the S&P momentum levels. Hold on. Again, I keep showing this every day to you guys because it's really, it's something else. Let's look at the S&P. Let's look at that 50-day line. Oops, wrong index. I got to be careful here. I went to sectors instead of indices. All right, look at this. Look at that. Starting to come back? I don't think so. Once it's stretched out, it's got to contract. It's got to contract. Very, very important. And while we're on the subject, 44% of stocks are trading below the 200-day moving average. So while the prices are above the 200-day moving average, internals are telling us that 54.5% of stocks are still below. So the market is still bearish on a long-term trend and stretched out on a short-term trend. Folks, that's a dangerous combination. All right, today's Thursday. I wanted to look at some weak stocks because there's some more weak stocks on my radar. We've got the usuals. We got Wells Fargo. We got Nordstrom's, but we got these two, Mohawk and OneOk. All right, so let's take a look at it. MKH. Whenever I have a new stock popping up on my short list or my long list, I always let you know. I must have got the ticker wrong. MHK. MHK. There we go. Let's take a look at this stock. Oh boy. Oh boy. All right, so let's look at candlesticks again. Ugh, nasty. Let's look at the 3-month. Nasty. 6-month. Nasty. This stock is just waiting to fall back down. No, I don't like this stock. And look, by the way, what I always tell you, when you're in a short position, wait for the stocks to hit the 200-day moving average and sell again, and look at what would have happened. If you look under a long-term basis, trend goes down, goes to the 200-day line and comes back down. But I don't like the stock at all. Now, I would wait for a pullback to about the 91 level, but I think the stock is going to go further down. So that's one. These are new stocks on my short list. OKE. Let's take a look at OKE. Usually we got the same stocks over and over, but sometimes we get newer ones. This one couldn't even go up to the 200-day line. And look at this, coming down. Wait for it to go up to about the 33, 34, 33.90 level, 34 level, and then I think it's done. Let's see if we got some more stocks that are unrecognizable. Yeah, NOV, TAP, let's take a look. These are new. These are stocks that are new on my sell list. Oh, terrible. Look at this. They never even made it to the 200-day moving average. And TAP. Let's look at TAP. Molson Golden. Good tasting beer. Oh, ouch. This is a stock to sell. This is probably one of the weakest stocks right now. Again, so let me give you the ticker symbols. These are stocks. If you own these stocks, sell them. If you're thinking of bargain hunting, don't. Short opportunities only or liquidations. So we got Mohawk, ONEOK, National Oil, and Molson. And I don't like Molson. Molson's looking really, really weak. So again, those are the stocks that you want to add to your chopping block. All right. Now, folks, before I let you go, I want to let you in on something big. If you need some help trading this volatile and crazy, unpredictable market, then I urge you to click on this link below and watch my next training session. Really, you should. Take the time. Do it. What's the downside, okay? You'll spend a little more time with me, all right? I'm not that bad, right? I've developed a system that works during and after huge market crashes, like right now, protecting you on the way down and delivering stocks primed to explode higher during the rebound phase. Folks, the period we're in right now. And I just identified the number one, that's right, number one fast cash stock that could earn investors $3,680 or more within the next 14 days or 10 trading sessions. That's good money right now. Click on this special training event, follow the link below, and learn all about it. Get in on the special training event stock by clicking on the link below. Identify the number one fast cash stock, giving you opportunity to make $3,680 or more, 10 trading sessions. How can you afford to miss that in this type of market climate? You can't. Get in on this special training. Click on the link below. Bye. Have a great day. Talk to you guys soon, and keep your eye out on the reports that are coming out very soon. Bye.